Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. Well, today we're talking about the impact of rising interest rates on commercial real estate values. And we have two experts here in Studio One. We're going to get their independent opinions on this question. First, Andy Warren, Director of Real Estate Research with PwC. So, Andy, what gives? What's going to be the impact of rising rates?
Why would I be afraid of rising rates as a real estate owner? Don't rising rates mean the economy is doing better?
Yeah.
So I'm going to have more tenants in a market that's got room to absorb some more tenants. Then I've also got a historically high spread over the 10-year Treasury with my cap rates now. So I think I can absorb a little of that cushion. So I kind of in the camp that I think if rates go up, there will be a temporary kind of pause in the market as it kind of recalibrates and people think about where it's going. But then you get back to the fact, well, okay, we must be doing better. So my outlook should be stronger than it is. Maybe I change my rent underwriting a little bit or my occupancy going forward.
And I like how you said that if rates go up, and that seems to be what a lot of the sellers I'm hearing from today is like, rates aren't going to go up. I mean, so what's your crystal ball say?
I think rates go up, but I don't think they go up enough. I think rates have to move 2-3% before you really start to see a hit. If we go up 1%, I think the market can absorb that without blinking. But I do think they're going up.
So let's say it's 2 years from now. What would you guess a range of? And I know it's just a crystal ball. We can't hold you to it, but what would you guess if you were investing? What interest rates would be 2 years from now?
3.5%, 4%.
3.5%, 4%. Okay. All right. Now, Mitch Roschelle from PwC. Same question. What's the impact of rising interest rates on commercial real estate values?
What he said. Nah. Everybody believes real estate is an interest rate sensitive asset class. I totally agree with Andy that we're going to theoretically raise rates, or the central bank will raise rates because the economy is improving. If the economy is improving, there's more theoretical demand for real estate, so we can afford it. But if I look backwards a little bit, here's what I don't understand. We created more supply of commercial real estate and residential real estate when interest rates were twice what they are right now, maybe 3 times what they are right now in real rates, right? If 2 goes to 6. So I don't really buy my own argument that it's interest rate sensitive. I think it's all about the supply and demand of capital. And will underwriting standards change? Will more debt be available in a higher rate environment? That's what's going to truly impact real estate. But here's the thing, and here's my bottom line nugget. The chase for yield has been happening in a period of falling real interest rates, and that drove a lot of investors to real estate because they felt like they got more yield investing, or they got more total return investing in real estate than they may have gotten in an alternative income producing asset class. So in a period of rising rates, do investors chase yield and chase it to real estate, or do they run away from real estate? That's the one thing in investor behavior that I can't answer. My fundamental belief would be, if you like the risk profile of real estate today, why wouldn't you like it when rates go up? But if you look at the way retail investors invested in REITs, and I mean retail as opposed to wholesale or institutional investors, when the Fed was going to act the last time they acted, they ran for the hills and ran away from REITs because they were worried about this notion that real estate is an interest rate sensitive asset class. So it depends on, will institutional investors who like the asset class run towards it because the returns are better because the rate environment has changed, or will they run away from it? I feel initially they're going to run away, and long term they're going to run to it. Did that make any sense, Mike?
Well, yes, it did. So let me ask you this. So let's say that you have a client buying a single tenant net lease properties with a credit tenant. There's a 15-year lease with no rental increases. So we take the rental increases out of the future value. We're just looking at interest rates and cap rate changes. What would you guess would be the ratio of a 2% rate increase on the cap rate of that property? And therefore that property probably is not, unless it has a little more demand maybe. But
I would look at that trade and not even look at what cap rates are trading at and how cap rates are trading in the market. I'd pull out the Bloomberg terminal and figure out what the credit rating of that tenant is and underwrite the thing that way. because what's going to happen is real estate is going to be more correlated to the fixed income market in a period of rising rates than perhaps it is right now. That's my take.
Are you getting a premium over the bonds that company could issue buying their real estate?
Yeah. So it sounds like you're suggesting, guys, then that rising interest rates, even a percent a year or 2% over the next 2 years, however you want to say it, it's not really have a material impact on the real estate values.
I think they're baked in. Andy and I were just talking about this in some emerging trend stuff. We've been asking our market participants for 5 years what's going to happen with rates, and they've systematically said that they're going to go up significantly in the next year, and everybody's been wrong. I think it's baked into everything.
Yeah. Well, it's interesting. We deal with some pretty large buyers, and they're always telling us the cost of their capital is always going to adjust their decision process. But gentlemen, thanks for being on the show. We appreciate you being here.
Thanks, Michael.
Well, stay tuned. We'll have more on this question. This is the Commercial Real Estate Show. I'm Michael Bull. Thanks for joining us, and stay with us. Hey there, thanks for checking out the Commercial Real Estate Show. Don't miss a video of special interest to you. Be sure to subscribe below. And if you appreciate the videos, be sure and thank our sponsors. There's a link to more information about them in the description. For more videos, podcasts, and articles, check out CREshow.com.